I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, let's start with CSX's earnings. They missed expectations. And the CEO, Jim Foote, had a quote that I'd like to read you and get your thoughts on. So he said, "The present economic backdrop is one of the most puzzling that I've experienced in my career." Do you agree with that?
Well, I don't think there was anything really puzzling about it if you read his own lines. I mean, you had crude by rail that was hurt by a refinery outage. That's the one in Philadelphia. You had coal down dramatically, in part because of natural gas, although met coal wasn't that bad. You obviously have a slowdown in much of the country when it comes to their region business versus where it was a year ago. But most importantly, we now have a surfeit of trucks. We didn't before. They were picking up a lot of business. Even with precision railroading, when you have intermodal down double digit, that is stunning. So it was a weak quarter both from demand and too much supply. It was actually a worst possible scenario. So as I'm going to talk about on the call today, if Jerome Powell listened to CSX, then he would cut 50. If he listened to Bank of America, he'd raise 50. That is a preview of what I'm going to be saying.
Now, the call that Jim is talking about is our Action Alerts Plus members-only club call, which happens at 11:30 a.m. this morning.
It's the most entertaining thing I do, and sometimes I get frustrated that only 3,000 people listen, because every hedge fund manager should do what I do. Every mutual fund manager should do what I do, but they don't because it's too embarrassing. Like, maybe I'll mention the fact that Cat's down 3, and, it shouldn't be down. I like Cat very much, but, that's an own admission to, like, wow, maybe I got Cat wrong. Maybe I got Dow wrong, I got Disney right. But I tell things. See, no money manager ever says they got anything wrong. Look, I used to be a money manager, and the greatest thing was there was a wall. You didn't have to tell people. That's not the way the club works, because it's a club. It's not a hedge fund.
And Jim, you were talking to me yesterday over on our Action Alerts Plus Daily Rundown, which is a show that we do after this, and you were saying that you and Jeff are going to show people how you guys decide when to buy and sell stocks, right?
I mean, we battle. I mean, take a look at Lam Research today. ASMLF says, which is a semiconductor equipment company, the business is really troughed, is going to go up. But Texas Instruments says they're going to cut capacity. So there you got Lam Research up 4, and then it goes down. And I argue precipitously that do we sell Lam up 4? We just bought Lam so low. And, give you kind of what we do. And we're going to focus on a couple stocks to show what we do. Because, again, I know what you want. You want to know what it's like behind the scenes in the investor conference, in the actual portfolio managers. They sit around a table. I've been there, and you've never seen it. I'm giving you the bird's eye look. Why do you never see it? Again, it's because if one person's wrong, that you'll all know. I am at my age where I'm confident enough that if I'm wrong, I'm willing to talk about it. If I can't talk about it, who can? But most people don't want to, because no one ever wants to admit they're wrong. I don't mind, because you make mistakes at home, and I want you to understand that everyone makes mistakes, so you don't think, wow, I'm an idiot. Professionals never say that they're wrong. This is to make you more confident when you invest at home, not trade, but invest. Confident by having knowledge. Knowledge is indeed power when it comes to portfolio management.
And circling back for a minute, the Jeff that I mentioned is Jeff Marks, our senior portfolio analyst over at Action Alerts Plus.
Fabulous.
So, Jim, I want to switch gears because I want to talk to you about your Real Money column from this morning, where you talk about big tech and how heading to Capitol Hill will hurt their EPSs. Now, I have a question. We're going to talk about this.
Not all of them.
But I have a quick question for you, but I do know that I want to talk to you way more in depth about this over on our Action Alerts Plus Daily Rundown. So my question for you right now is, how can we regulate the internet without stepping on big tech's toes, and more importantly, investors of big tech?
Well, I think that what's going to have to happen is you may even have to have, and I didn't put this in the piece, a cabinet department, or just like, the start of all the government regulation was the Railroad Commission that we had. That was something where we felt that there was antitrust for railroads. We created a commission. Maybe there needs to be an internet commission. Now, I've not said that yet. It's something I'm developing. I don't want to necessarily go out with it, but that's where we're going. There'll be an internet commission, and once you have an internet commission, there will be the kind of regulation people want. The reason why you had the Railroad Commission was because they were fixing prices, and they were doing things that were considered to be way out of school. They were way too powerful. The government started. It was the beginning of the way that, and then we did the Food and Drug, and they're going to be an internet commission if these guys aren't careful, and it's not going to be positive.
You ready for some investing education?
Of course.
All right, so when a stock rises after missing expectations, why is that? What should investors do?
That's typically because, like a Western Digital, they may say, Listen, we missed it, or Micron. We missed expectations, but you know what? Year over year, we're going to be pretty good. Year over year is a clarion call to say, you know what? I got to get in. So when I hear missed expectations, I then look at the next, which is we're now in July. In July, you're able to make a forecast for 2020. If they say, this might be what happens with NVIDIA, by the way. They just say, look, next quarter is the last quarter that we're going to not guide up, and then 2020 is upon us. They need the Mellanox deal to be done, but that's what I mean. You get that kind of situation where you can go through, ain't no valley low enough? No, that valley is not low enough to stop investors. It's an anti-Marvin Gaye, Tammy Terrell.
And
Who's
Jim,
actually Ashford and Simpson, by the way.
Finally, we have heard from most of the big banks, and I'm wondering, if you are looking as an investor to get into the banks right now, would this be enough? Would the earnings be enough?
Typically we have an overhang. They go up, and then we have this. Wait 3 days. They'll be in there buying. J.P. Morgan will be buying. Goldman Sachs will be buying. Citi will be buying aggressively. So I like the group very much. Those are the three that we own for Action Alerts. If I do get a question.
And you ranked them yesterday over on our daily rundown.
I did. Well, I mean, you got to keep re-ranking because Bank of America was pretty good. But Goldman was really superior because Goldman's getting recurring revenue, which is going to be able to give it a price to earnings multiple that's not the lowest in the book other than, say, Micron, GM, and Ford. How the mighty have come down.
All right, Jim, it is 10:08, which means that, guys, you've got about an hour and 30 minutes to sign up.
That's all the time I have to write.
That's all the time that you got to have to write the top of the show.
And it is a show.
Yep.
I put on a show, and it's not Broadway, it's money.
And of course, just a reminder, my bad, you can go over to actionalertsplus.com to sign up for a free trial to listen to what Jim has to say about earnings.
I've really worked hard on this call. Been working on it since Sunday. It's the most important thing I do for the club.
And Jim, today is a big day, not only because of your call, but it is actually our cameraman, Sean Elias' birthday, and our producer, Erica Santoro's birthday is tomorrow.
Oh my. Well, I guess we may have to break all the rules and eat some cake.
Sounds that way. All right, Jim, thank you for joining us. That's all the time that we have for today. And if you're watching over on TheStreet.com or on Facebook Live, we are now switching over to our Action Alerts Plus Daily Rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.